Thank you very much, Henry, and it's good to be with the Center for Global Development again, CCG in China. It's a wonderful partnership. I'm going to share my screen, but I'm not going to go through the entire presentation because I think Ayhan covered things quite comprehensively already. The key messages that I would like to emphasize for the case of China very much resonate some of the messages that Ayhan talked about, only that the timing in the case of China is a little bit more advanced. So let me explain this. First, China's efforts to control COVID-19 were quite successful early on. And this has been one of the factors that led China to recover much more quickly than much of the rest of the world. And we see this in the data with a large statistical rebound in GDP in the first half of 2021. And Ayhan presented how the recovery from the COVID-19 recession in 2020 was a very, very sharp recovery. But how that recovery was also followed by a particularly sharp slowdown. And we see the same thing in the case of China, only that it already started in the second half of last year, where the economy started to slow down quite significantly. Now, when we look at some of the factors that contributed to this slowdown, I think we see some differences to the global picture. First of all, in China, COVID remains largely under control, but the zero COVID policy has been put to the test by the emergence of Delta and most recently the emergence of Omicron. While China has managed to contain local outbreaks, their frequency has increased despite a high vaccination rate that China has achieved. And this has led to temporary disruptions to supply, but also has interrupted, in particular, the tourism sector and some other face-saving services, which is reflected in GDP and remains a risk to China's prospects going forward. Now, on the demand side, China has benefited a lot from the very significant stimulus that the advanced economies enacted. And this has allowed China to sustain fairly high growth rates, even as domestic demand already started to tail off in the second half of the year. And China has used the very strong statistical rebound to relaunch de-risking efforts and to tighten financial regulations, particularly in the real estate sector, which has on the whole had a contractionary impact on the economy in the second half of the year. So both fiscal policy and monetary policy have tightened at a time when global demand was very strong. And so the aggregate picture that you see in that 8.1% growth rate is really a combination of multiple factors. Number one, very, very strong statistical rebound in the first half of the year. Number two, sustained strong export performance, benefiting from the stimulus that was enacted in other countries. Number three, renewed temporary COVID outbreaks that have led to some disruption both to domestic demand and to supply, and have weighed on GDP growth. And number four, the tightening of the policy framework and the de-risking policies that have decelerated, in particular, investment demand. Now, going into 2022, this environment is likely to change. The statistical effects are no longer going to be in favor of growth, of course. The global environment is tightening significantly, as Ayhan has pointed out. With the mutations in the virus, renewed outbreaks cannot be excluded, and China's zero COVID policy will require continued vigilance, and these outbreaks may weigh on growth. On the other hand, macroeconomic policy is expected to be loosened going into 2022, and we already see signs of that happening. However, the challenge for China is that if in the face of a generally less benign global environment, it loosens policy too much, it reignites some of the imbalances and some of the financial risks, both in the real estate sector and in local government debt, and more generally, risks seeing an increase in what the Chinese policymakers call the macro leverage ratio, essentially the share of credit to GDP, which is already very high. And so policy needs to be carefully calibrated to on the one hand, ensure that growth stays close to potential, against the background of a difficult external environment, but on the other hand, that the sources of growth continue to rebalance to more sustainable long-term sources, including a greater emphasis on consumption, a greater emphasis on services, and a greater emphasis on green industries. And that the driver economic growth shifts, that there is a handover from the dominant role of the public sector, which really led the initial part of the recovery, to more private sector-led investment. And that requires structural reforms that increase the confidence of the private sector in the future of business prospects in the Chinese economy. So I have a whole set of slides and numbers in the presentation, but I think, in a sense, I would limit my remarks to those key messages and briefly turn towards the end of the presentation to our forecasts for this coming year and to the key policy suggestions that we derive from this. So you can see here a different representation of what Ayhan was already talking about, the slowdown in global growth in 2022. And you can also see what we anticipate this would mean for China. This is better pictured in this slide here, where you can see that our growth forecast for China next year is 5.1%. And that number is very close to what we see as the trend in potential growth. It's a little bit below potential growth, but it's very close to China's potential growth rate. And you can see that in 2023, we basically expect a number that looks very similar to this. So really what's happening is that China is reconverging to potential growth. But what that also means is that in order to sustain growth, really China needs to emphasize reforms that enhance the economy's growth potential. And this is all the more the case because there continue to be downside risks from a cyclical perspective due to COVID, due to global supply disruptions, due to tightening in global financial conditions. But there are also a number of significant longer-term structural challenges that China faces. And this is what I want to briefly turn to in my last couple of slides before I close. The first is to emphasize the combination of structural and cyclical challenges consisting in handling the pandemic, dealing with the property market slowdown, but also the following more long-term structural issues: stagnant productivity growth, more or less since 2013. China's total factor productivity has grown at very modest rates of around 1%. There's been a slight increase before the COVID pandemic in 2018, 2019, but productivity growth has basically been slow. That's similar to most other countries in the world. Demographic headwinds. We're likely to see in 2022, the first year in which China's population may not grow. There are even reports that it may have declined in 2021. But clearly the demographic transition in China is moving in a different direction than over the last 3 decades. High levels of local debt, which mean that local governments have a difficult time to stimulate the economy through additional local development projects. It is also the case that China's physical capital stock has now reached the same level as the OECD countries. So although China's per capita income is only slightly below a third of the OECD average, the amount of physical infrastructure per capita in the public sector in China is the same as the average in the OECD. And a lot of us are in many ways impressed and grateful for the excellent transport infrastructure, the high-speed railway, for example, the airports, etc. But this also means that China's ability to stimulate the economy with more traditional infrastructure investment is more limited. New infrastructure is what will need to be identified, for instance, in the greening of the economy. But that is much more, requires more policy coordination, requires more policy guidance than the traditional local development-driven infrastructure investments that we've seen in the past. The declining dynamism of firms, concerns over limits to competition, and growing inequality and slowing social and educational mobility. These are long-term challenges, many of which we outlined in detail in our joint study with the Development Research Center of the State Council, the DRC, in our Innovative China report in 2019. So to summarize, achieving high-quality growth requires a multidimensional rebalancing. Rebalancing in terms of the composition of demand, from external to domestic demand, and from investment to industry-led growth, from investment and industry-led growth to greater reliance on consumption and services. So this is the rebalancing that China has been trying to achieve and that a lot of the 14th five-year plan is about. The second, shifting from the significant weight placed on state leadership and regulation to a greater role for markets and the private sector. This is something that was announced in the 19th Party Congress, a more decisive role for markets. This remains, in some sense, unfinished business and remains a key challenge, particularly in light of the slowing productivity growth that I mentioned earlier. And thirdly, transitioning and rebalancing from a high to a low carbon economy. And here it is worth emphasizing that what we saw in the first half of 2021 and the second half of 2020, so really in the 12 months between the middle of 2020 and 2021, was a very sharp economic rebound, but an even sharper rebound in emissions and in energy demand, because the rebound was driven a lot by traditional infrastructure investment, by real estate development. These require a lot of cement, these require a lot of steel, and these inputs require a lot of energy. That was reflected in growing energy shortages in the middle of the year. It was also reflected in a very sharp increase in emissions. And so it's clear, both from a financial risk perspective, from a sustainability and productivity perspective, but also from a greening perspective, that these cannot be the sources of future Chinese growth. And really that the rebalancing that is required both from a macroeconomic perspective, but also from a structural perspective to make growth more sustainable over the medium and long term. And so to summarize, China has been the first to bring the pandemic under control. It was the first economy to recover from the pandemic. We see this in a very strong performance in 2021. China has benefited additionally from the fact that other economies have put so much money into their stimulus. That has allowed China to be one of the first countries to recalibrate its policy mix, step off the gas, reduce the stimulus at home, and re-embark on structural reforms and de-risking policies. Going into 2022, the environment is less benign than it was last year. That means that China may need to relax policy a little bit, but fundamentally, we think China needs to continue its de-risking and structural reform agenda in order to make sure that growth over the medium term is both more sustainable, greener, and more inclusive. And so with that, let me stop and look forward to the questions from the audience.